Hello, hello, everybody. Welcome, welcome, welcome. My name is Valerie Alvarado, your U.S. Ambassador for Altos Tequila and Dalmegue Mezcal. Hello, everybody. I'm super excited to be here with you. So we have some wonderful guests here. We have John Birena, JD LLM, Managing Attorney with Texas Hospitality and Nonprofit Law Center PLLC. We also have the marvelous Diana Figuera de Valle, a PhD in physics, Jibaros, Conbac, and La Mata. Along with her in this wonderful video, we have David Roque Gutierrez, MBA of Jibaros, Conbac, and La Mata. So good to see you all. We're going to do a little overview of this class. So while passion and creativity fuel entrepreneurship, it's crucial to pay attention to the legal aspects that can significantly impact your business success. So we're going to be understanding and addressing these legal considerations before starting a business so you can avoid massive errors and ensure your business is well protected. Super important for us. And while legal matters aren't the only part of a winning business plan, you will also need to consider product line, sales, marketing, funding. So this seminar is really here to provide invaluable guidance for creating either a nonprofit organization or a for-profit company. And we're going to be going through some tips to put them together in a business plan that stands out from the crowd. And before we get into it, you already know there's 4 things we want to ask of our fans here. So if you want to, 1, like us on Facebook, 2, subscribe for a channel on YouTube, 3, follow us on the gram, and comment below. Ask questions, get involved. And especially if you're one of our 50 cohort students, we definitely want to see you, hear your voice. Your comments and questions are how we mark you as present. And obviously our presenters love to hear from you. It helps us know that you're here, you're involved. But let's get into it. We have so much to cover. So we're going to start this out with Diana and David from Jibaro and how that led to La Mata. They're here to discuss their journey and how their business model grew. So I'll let you two take it away.
Hi everyone.
Hi everyone.
We are Diana and David. We are, as Valerie was saying, from Jibaro and La Mata, and we are super excited to share with you a little bit of our story, how we start our businesses, and how we conduct our business model plans, and how we adapt it, and how we are doing today. So we first start with Jibaro. Jibaro, it was our first business. It's like 6 years now.
6 years.
6 years now that we started. And after Jibaro, we started La Mata as a consequences of being working with Jibaro. We started being as a bar. Davey, want to tell you a little bit about the story behind Jibaro?
Yeah, when we begin the project, we have this problem with the approval of the liquor license, and the only option was to develop a new range of unalcoholic cocktails. So in order to do that, we have to develop that in like 2 months. Then we begin to work in development these craft mixers for our own cocktails. So then we have to make it like interesting flavors, working with local products. And that in that moment, that was only like it was very new in Cuba, in Cuba. And then when we begin to working with our cocktails, we develop these new relationships with spirit brands, with other restaurants and bars that begin to ask for this product for them. They begin to it creates an interest in these kind of products.
They start asking us where they could buy the products for they to use at their own restaurants or bars or at their own events. And when they realized we were making just for our own consumption, we see then that there was a huge market opportunity for us to start producing these, not just for our own consumption, but to start selling to them. So that was the beginning of La Mata as an idea, as a concept. Nowadays, we have still Jibaro. We work with the restaurant still open, and we are also producing the mixers for other restaurants and bars that have interest in using them.
And thanks to Tahona and to Altos Tequila, we have the opportunity to do that in the, I don't know, like in the short term, because it was a project that we were we are going to develop, but then we win Tahona, and then we are currently producing, and it's a successful business.
Yeah, and what we want to do mostly in this time is to share with you some tips that for us were important, and we were constructing the business plan for La Mata. We realized some things that even though you have the whole business plan, you know all the steps you have to follow, some steps for us were more challenging than the other ones. And we realized, especially when you are in front of the investors, you have your own Shark Tank and you have to present your business model, what is important to address. For us, first thing was super important. To understand producing for the rest. So that was important to establish. We were lucky because since we already have another business, we took that as a platform for tasting. And in the network that we have friends that had other restaurants, we have friends that had other bars, and we start attending a lot of conference, we start attending a lot of events, and always carrying with us the products and showcasing what you could do with them. So that was for us a super important step. Just from the beginning, be sure what other people were thinking of your product and how could they use or not for their own businesses. Then, yeah.
Right now, with that experience, being like that this kind of experience in the working and co-working led us to develop this empirical way, I like to call it, of gathering our own information of the market. So it's a was like very like a rich experience. So that helped us to develop a new range of products that we in the beginning we have not think about the development. I can't pronounce the word right. That is the case in the specific case of our substitute or develop our own recipe of what is it?
Worcestershire
sauce, and that right now is our premium product.
Yeah, and also that experience, that story, bring us to another important step for us. That is just like when you start your business plan, you have your mission, you have your statement, and something for you that it have to be unchangeable, that is rooted to the core of what you want to do as entrepreneur. I want to do that with my business. That is going to be my mission. But for us, it was important to also be flexible and to start adapting to new situations, to new market opportunities that were aligned with our initial business plan. As we were just like starting to produce, and we were starting to deliver the products, we realized that besides what we think at the beginning, 6 months after, there were a lot of space, a lot of room for new products that were in the same season that we created at the beginning, but it was just like different timing. So that's why they were new for us. So we say, okay, let's go into adapt. Let's go into introduce them in our share of products, and then let's go into start producing. And right now is the best selling product we have, though we did think about it at the very beginning. So I think adaptability and is going to be important when you are just writing and starting the business plan. Also, when you have everything together, that you gather all the information, you have your business plan complete, one important thing I think is to take your numbers, just like the really important ones, the capital you need, how fast you think you can grow, the equity you're going to have, and just like present that in a simple way, but to make sure you know your numbers. And I think that make the charts to know that they can trust you. When you go to find investors, they want to invest in you. They want to invest in what you are developing what you're doing. It's not that the business is going to be good or not. They're just seeing you. They're seeing you. They're listening to you. So they have to trust you. And it's important that you show information that is accurate and give them a space to understand what you're trying to build. Even though it's not super final information, because it's information you're going to start doing about models, is what you project. But even though presenting that information in a clear way is important for the sharks.
One experience that we have also was sometimes when we develop our business plans, we're like very focused in our current context. But sometimes, like the possible investors want you to, if your business is successful, they want to maybe implement it on or develop it in other kind of context. So you have to be like the dynamic, also thinking. Sorry, my English is not like very good, so I'm trying to make my best here. And then the if you can develop this business plan that is dynamic enough to, I don't know, think uh, can I make this business in another state? Maybe even make this business in another country. That is like very helpful. Like the investors are looking for that. You have in your plan, in your original plan, maybe in 2 years or on the short term, that you can take this business and get it done in other place.
Exactly. You need to think about that when you are preparing the business plan, because if you cannot do that, you need to think why, and then maybe just like align that with your mission, and your start looking for key partners and start looking for alliances that allows you to grow in the short term. I mean, investors always want the money to grow and the money to come back, and they want to make sure that you can grow and grow fast enough. And that is another thing that for us is important, because at the beginning you have really not enough capital, you have little money that you need to think really careful where to put, and you want to be sustainable, you want to do everything, but maybe you can't because you don't have enough workforce, or you don't have enough money, or the machinery you have is not enough. So what you can do, for us, what worked from the beginning was start building alliances. With alliances that you can find people that share your missions statement, that have the same interests that you have, that are worried for the environment, that want to have a social business, that want to get community involved. And those business that share all those principles that your business share can start just like working with you and start being part of your chain value. For example, in our case, one example is like we are working with fruits, with natural fruits, and we were not able from the beginning just to work with every part of the fruit. We process the fruit, we have a surplus, and we have all the remainings that we were not at the moment knowing what to do. So we make an alliances with another business that work with the heater traded food, and we start giving them what we don't need. So they make sure that they process the fruits, and they include in the raw material chain. So in that sense, we close the cycle. We are not being not sustainable.
With excessive, example is the lime. The lime we are right now, with every lime that we use is 100%, 100% use without us incurring in the excess cost of the machinery that we can afford right now. So with that alliances, it's good for them. They're making money out of it. But for us, it's not excess cost, and then we don't have to include that cost in the product, the final product for us, and then making our product, our price very competitive.
Exactly. So
Could I?
with that,
Could I interrupt you for one quick question? We had someone ask, What are the metrics that you utilize to create your financial and units sold over time growth projection? So, like, what are your metrics for growth?
Sorry, can you repeat?
Yeah, what are your metrics that you utilize to create your financial? And oh, it popped on the screen as well, if that helps. So, what metrics do you utilize to create your financial and units sold over time growth projections?
Okay.
Yeah, when we tried when we did make this, we were use like the original like statistics like systems. We make like this small market study. Like we went like take like the the 10% of the market in our state, so to speaking, and then we make like an increment of growth because in that moment that was a year ago that we begin like the actual production, and we begin growth of 35% of increasing for year. Sorry, but
Yeah, I think it depends. Every state or every context is
context.
different for just building or using metrics. It depends what is working for you.
I think they're frozen for just a moment, but we'll hold on for them. They are out and about, obviously, with this lush background. They're hunting down the best Wi Fi possible. So we'll bear with them for a moment and get back into it. Thank you for all of the interaction, the comments, amazing questions. These two are such a wealth of knowledge. So I'm super
For you,
grateful we
this
have them. Oh, hello, hello. They might be back. We'll stay tuned.
Yeah. We lose it.
but you lose
Hello.
us. We were just going to say hi, we're
Hi.
here.
Hello. We missed you.
Hi.
I hear it.
I'm so sorry to make you repeat
Sorry.
all of that. No, you're totally okay. Sorry to make you repeat it,
Okay,
but if
okay.
you wouldn't
Yeah, when we
mind,
begin. Yeah, with the metrics. Yeah, no problem. We begin like making this in our context, in our state. We make like a 10% study market of the possible needs of the restaurants and bars. Then when we begin, once was a year ago. So in that moment, we were the only company doing that in our context. So it was like we want to be like aggressive, and we prevent an annual growth of the 25 to 30%.
So, and I was saying that every contest is different, and every country also system works differently. So you need to choose what is better applies and show what you can do in your own context and situation. And it's hard to just like extract and start just like saying numbers in different contexts because maybe it's not working. I don't know if you
yeah,
listen
that
to
was
us.
great. Yeah, we heard it all.
Because I was just like everything was freeze again, so I said, "Oh my god."
Oh my God.
No, thank you for repeating that. That was wonderful.
Okay. Also, I think just like one final tip we want to share is just like it's important also to work really close in the channels you want to use to um, make your product to appear in the market. Or for us it was easy because we, in the context we were working at the time, we were the only ones that were making that product in the way we did. I mean, we're a small business, we are artisanal production line, but there were a huge need. We realized there were a huge need for what we were doing. When you are trying to develop your business plan, try to think really careful about the channels you are going to use to distribute your products, and how you can adapt that to reach more possible consumers, and to make sure that your product is visible for other people that is not maybe in your close network. I don't know if you want to say something.
No, I try. For us, this work like being aggressive. Sometimes we are fearful with the investment. We are cautious because I don't know it's our money, no. But in a way, you have to be like aggressive. In the when you get the example for us was the sauce. When you get this opportunity, you have to be enough aggressive in your original business plan that you take the opportunity in the moment. Right now, we are like doubling our production in I don't know in 2 months, where in 6 months the product has this product has 6 months in the market. So in 6 months, we are doubling our capacities of production because we are not we don't no how
Okay, because we can produce more. That's why we are just trying to scale up the production.
with only this product. So
Yeah, it's just like sometimes for us, it's just like when you have a product that is like in, like your star, and you want to just like focus on that because you want that client to stay with you. And it's just not about because you cannot find more people to sell your product. It's just like you can produce more because you need to invest again into buying machinery and just to scale up the production that you already have. So also that is important, because for us at the beginning that was not an idea. We think, no, yeah, what we are going to do, we need to find the clients. That's why I say like the channel for just like reach your clients is important, because with what we are going to do, we can supply and say that it's not enough. We have more demand that we can actually
so you have to be prepared that you sometimes you only need one client big enough, and that is the game changer. So you have to expect that if you want your business to be successful, sometimes you have to be prepared for that opportunity, because sometimes it only gets you one time, and then that is the lead that you need to develop the rest of your products. Don't be like sometimes it happened to us. Don't get in love with your product, with your service. Think big, because sometimes only one client is what you need to like to develop the whole business.
Those are such great points. Did you have any other closing statements or anything else you want to add?
Yeah, it's just like just saying like for us, besides all the tips we have been sharing from our personal story, I think adaptability is what it will be the final thought here. You need to be eager to adapt every time you have just like constructing the business plan. It's a process. We From the original idea we had when we started working with Sahona at the project, and from the final business plan we end up, it was a huge difference. Because once you start going through every step, and you start just like really thinking into every piece of your business and to project. It's important always trying to project in short terms, in long terms, how you want your business to grow. You will see that you end with a completely different approach. You have still your goal that is unchangeable. You have your purpose. You have the core of your business, because that's your personal mission. That's what you want to do. But you see that as you go further, just like constructing your business plan, you need to adapt. You need to adapt because you need to find solutions. And and it has to be fast, because you need people to believe in what you are constructing. So you need people to go with you into your dream, because you have a dream and you want to see it succeed. And you need people to invest. And I always say it's important people to invest in your business, but people is investing in you. Yeah, they are investing in you and in the energies and in the capacities you put into grow your business.
That's so well said. I love this. Like, you have so many great phrases in this that I think are huge. We have one really wonderful question here that we're going to start with. It's on the screen, but I'll read it out as well. where did your marketing start 6 years ago versus where your marketing is now? For example, did you start with word of mouth and some social media and then move into adding an online store? So 6 years ago versus where you are now with marketing.
Yeah, that is a little bit what we were saying before, that you need to adapt, because in 6 years so many things have changed that you need to start adapting. For in our case, we started Hibaro 6 years ago, but we started Lamada 3 years ago. So it's like different timing for each one of those business, but for them have been the same. We start mouth to mouth, and for Lamada it was even not us saying we are producing this. It was people asking us where they could buy what we were using. We were using something that we were making for ourselves, and people start saying like, "Where can I buy that? I need that product. Do you can tell me where did you buy it?" And we say, "No, we made it." And so it's like, "Oh, can you make for me or can you make for my business?" And it was, yes, it started being like mouth to mouth. People just like knowing about us and the product because of the events and the alliances we start making with other companies and businesses. And we start just like, yes, having social media is super important nowadays. Instagram is like a huge page in our context. Other social media also is important.
Yeah, and for us, maybe the mouth to mouth, but with a specialist. When you have this client, you get maybe it's not the bigger client, but you have this person that it can recommend you directly, have the reputation in the market, and says this product is good. That help us a lot to us.
Yeah, that's important. When you have someone that is respected in the area you are working, or you want to expand, or you want to grow, or you want to start your business, finding someone that can talk in behalf of what you're doing is like changing everything.
Yeah. Maybe it's not the bigger client, not the biggest, but it's have the possibility because of the reputation that the company or this client has. Is a game changer also. So for us, that niche of marketing has been like a game changer for us.
And it's something that you don't have, at least in our contest, it's something you don't have to invest a lot of money, because you have to invest a lot of money into social media and marketing. But when you knock doors and you have people that is respected in your segment that recommend your product, it's just like one person talking about, and that's it.
Yeah, that's an alliances right there. Maybe you have like the develop with us that kind of client, then you do develop alliances. So
yeah.
Amazing. Thank you for these responses, and like thank you for the questions. This has just been so wonderful, and I'm so excited to keep hearing from you all. We'll share ways that people can find out more about you and contact you, but truly this has been stunning. You guys are such an inspiration, and there's so many great tidbits of advice here that I'm sure everyone will have some great takeaways here. So thank you so much.
thank you for having us. It's been
Yeah.
a real pleasure for us.
Yeah, thanks for the invitation, and we hope we could be in touch. So if you have any questions, and you can, you can keep in touch with us.
Keep in touch with us via Instagram, and we are happy to help in every way we can.
Love it. Thank you. We appreciate you so much. All right, everybody. So next up, we will be speaking with John Villarena from the Texas Hospitality and Nonprofit Law Center to guide us through some legal matters to consider when starting your business. John, welcome to our Alto Stona Society Entrepreneurial class. I will let you take it away. Welcome.
Thank you. Thank you, Valerie, and thank you, David and Diana. That was incredible, and definitely probably the sexier part of this whole conversation today, now that we get to get into the legal considerations. If you would please go ahead and bring up the slides. Thank you. So this is navigating legal landscapes and really essential considerations for new businesses. We're going to talk about for-profit businesses and nonprofit businesses. Kind of real quick run through of the content so you know where we're going. Briefly, just introduce myself. Formation of a for-profit, formation of a nonprofit, some intellectual property things to consider, website, and if we have time, I have a couple little other things, but obviously depends on time and where we are. So About me. Yes, I am an attorney. This is my law firm, the Texas Hospitality and Nonprofit Law Center. I'm also a professor of hospitality management. I didn't go to law school until I was in my 30s, and everything I did before that for 2 decades was all food and beverage. So I have taught hospitality management at the university level. I've been an author. Maybe you've seen some of my stuff around. Most importantly, I'm a husband to an incredible wife, Shenandoah. And yeah, still enjoy making drinks and teaching about education or all things hospitality. So that is me. Okay. And this is likely why you're here, not just to learn about me. So we have formation of a for-profit business, and we're going to walk through some of the steps. And really, this whole presentation is the kind of background information that I would be giving a new client who comes to me and says, like, I want to start a business. What should I be looking to do? So you're going to get, that introduction. So for the formation of a for-profit business, this is going to be done at your state level. So every state is going to be different, but there are some similarities. So for example, you're going to be filing whatever documentation you need to with your Secretary of State. In this slide, you see this is the website for the Texas Secretary of State. Since I do, a lot of work in Texas, you might file an Articles of Incorporation or a Certificate of Formation. What you can see right here is just a copy of that documentation in Texas. That's Certificate of Formation for an LLC. Now, most states have online portals for this. So while there are still paper documents, it's really easy to just go online and handle this. Now, of course, you can hire someone to do this for you, and there are very valid reasons for doing that. But there's also a lot of really bad companies out there that are all over the internet that you can hire. So do your due diligence and make sure you're finding the right people to join your team and help you out with things like formation. So part of this formation that you're going to be doing, and one of the most important things, is really choosing your name. And, this comes down to, at the very beginning, going to your Secretary of State and making sure that, number one, the name that you're thinking about is available. And then each state has their own requirements. So you want to make sure that you are following along with those. You also want to, consider what website you're going to be using. Are you going to be using the exact same name as what your business name is for that website? Social media, same thing. Make sure that those names are available. One thing that often gets overlooked that's very important is to go search the U.S. Patent and Trademark Office for trademarks either that are pending or that have already been granted. And I'll get into trademarks a little bit later, so we're not going to really discuss a lot right now, but other than this is a step that gets missed, and then people start their businesses, and a couple years down the road, they find out, oh, they're using someone else's trademark. And that would have been an easy few minutes search to figure out if that was even available. And then you also want to consider, are you going to be trademarking your logo or your trade name? Again, we'll get into this a little bit later, but these are the thoughts that you want to be having at the very beginning. And then, are you wanting to use a DBA or an assumed name? Really, when it comes to that might be for asset protection. You could be using a DBA, so then no one really knows what your true company's legal name is, and that can help out in certain lawsuits for different reasons as far as timing goes and statute of limitations. But you don't have to use a DBA. And again, this is going to be a state rule and oftentimes county rule. So make sure that you are, looking into your local laws as well, or working with someone who is going to hold your hand and get you through all those local rules. Okay, still part of formation, every state requires a registered agent. Now, a registered agent is, it's really the business's point of contact to receive certain documents from either the state or lawsuits. And so here in this, graphic, what do we have? Someone with a lawsuit, they're going to present it to your registered agent, and then the registered agent presents it to you, the business. The state wants to know this at the time of formation, who this is, because this is going to be public information. This is actually how people find you when they want to sue you. But you have to have this. And so one of the things you need to also consider is, do you want to do this yourself, or do you want to hire a company to be your registered agent? There's benefits for that because if you're using your own address as a registered agent, and let's say you work from home, now public information is where you live, versus you could have a PO box for that, or hiring a company to be your registered agent, and then everything just goes to them and they have the responsibility to forward it over to you. That's what I do with my businesses. I have multiple. I'm not the registered agent. I'd rather have someone else do it and no one knows my personal information. So again, things to consider. Now, when you're going through your formation, one of the biggest decisions is what type of legal entity do you want to be? And right here on the screen, you see we have a sole proprietorship, single member LLC, multi-member LLC, and a C corporation. You'll also find partnerships. I don't really cover that, and I'll explain in a little bit, but these are really the four things that jump out to you right away when you're starting to consider what type of business you're going to be running. And at this time, when you're creating that business plan, think about your short-term and long-term goals, what type of services or goods you're providing, what type of liabilities you might have, and that will help you to answer what is the right legal entity type. But beginning on this slide, we see the sole proprietorship. That's you just acting as yourself. I mean, you have a business, but it is really just you. You haven't formed anything else. There is no limited liability here. So someone can sue you, and they're coming after your personal assets. I see someone asking a question about a B Corp. I will get into that in a little bit. That is actually not a separate legal entity, but I'll cover that in a minute. So don't do this. Do not be a sole proprietor. You are opening up liability for all of your personal possessions. Don't do this. But I have to show it there. Now, single member LLC and a multi-member LLC are the same entity. They are both LLCs. The difference being one has one member, the other has two or more. So LLCs came around in the early 90s. So they've really only existed for 30 years. And there's two big advantages for using an LLC. First is much fewer formalities than a corporation. And what that means is that they're more flexible in how you want to manage them and the business dealings. So it's a big advantage to be using an LLC versus a corporation for that point. The other advantage is your members are shielded from personal liability from the debts and obligations of other members and also of the business itself. So it really is the business, the LLC is a separate entity than the individual member. Of course, if you don't do things correctly and if you're fraudulent or act in nefarious ways, they can come after your personal assets. So it's a very good limited liability as long as you're not honestly doing some really messed up things. So here we have in this first little circle, that is your single member LLC. Again, this is all done at the state level. There is one caveat for this. For those of you who live in a community property state, and there are 9 of those in the US, you can be a husband, wife as 2 people, but the IRS will still consider you as a single member LLC. So that's just one caveat to where you actually have 2 members, but for all intents and purposes, you get looked at as one. Moving on to the multi-member LLC, really it's just like the single member LLC, but you have 2 or more members. But this is where you start to see the flexibility happen because you can create different rights for different members. You can have your profits and losses shared differently. You can have different voting rights. And this is the flexibility that a lot of people really love having multi-member LLCs. And then you have your C corporations. So around the 1300s, we started to see our first C corporations come around. They've been around that long. And they were really, really popular until the early 2000s. But the reason people have been starting to move away from that is that they are rigid in formalities. So the flexibility of an LLC makes this so much better than a C corporation. But corporations still do provide their shareholders with limited liability. So there are advantages to choosing a C corporation, again, over being like a sole proprietor. And if you're looking to really go public, a C corporation is likely what you would be wanting to do. However, you can easily convert an LLC to a C corporation down the road. So you don't have to start off as a C corporation. You can always become one later. So do we have any questions or anything? Okay.
So far, so good. I think you're touching on a lot of things, and this is fantastic.
All right. Excuse me. So this is when we get into our tax classification. So we have the same entities at the top, but now we're going to discuss taxes, because you need to know as a business owner how this is actually going to be taxed for your business and also for you individually. We're going to go very high level here. I mean, we could spend hours talking about the nuts and bolts of this, but I really want to just give everyone a high level, because this is where there's a lot of confusion and a lot of really bad information on the internet. And so I oftentimes have to counsel my clients about this, again, for extended periods, and sadly we don't have that, but at least to give you an understanding, a basis of what you're thinking about with tax classifications. So the blue lines that you see going down are going to what is the default tax classification. And then I'll get to the pinkish lines in a second, but we begin with our sole proprietorship. Again, don't do this. I mean, it's there, I'm showing it, but just do not, please. If you take one thing away from this, do not be a sole proprietor. Then I'm going to skip all the way down to corporations. So corporations get taxed as a C corporation gets taxed as a C corporation as a default. This is where you might have heard the terminology of double taxation. So you have the profits of the corporation. So they're paying taxes on the earned income. But then if the corporation pays a dividend to the shareholders themselves also pay taxes on the dividends. So that same money has been taxed twice if it comes to you in the form of a dividend. This is one of the reasons why C corporations, from just a taxing standpoint, are not favored in a lot of businesses. But again, if you know that you need this, then, as far as the type of investment and what you're trying to build, you're going to just live with it anyway, or you're going to find a different way to be taxed. The next, going to single member LLC. So again, by default, you see that it goes down to a sole proprietorship. Now, I told you earlier, don't be a sole proprietor, but that is strictly for liability purposes as an entity. When we're talking about taxing, a single member LLC is taxed as a sole proprietor. What does that mean? So here we have the business, and all of the profits and losses shoot down to your business owner. And then what you're going to do as that business owner, as the only member of the LLC, when you're doing your tax return, your Form 1040, which I hope everyone has filed this year's taxes by April 15th, or at least ask for an extension. Here, you're going to add on Schedule C, which is a profit or loss from business form, and you're going to attach that to your personal Form 1040. I want to reiterate that this is not a separate tax return. It's just an additional schedule that goes to your personal form. Now, one of the things that people say why single member LLCs that they don't love the taxation of this is that you are going to be paying self-employment on all of the profit. So very different than what most people are used to when they have a W-2 job. And again, as long as you're prepared for this, you can plan ahead and handle this. This is really a great reason why just knowing about how this works, because there's a lot of people who will start single member LLC and they don't understand that they have to start paying self-employment taxes, or at least planning for that. Okay, so moving on, we have our multi-member LLC. So here again, I'm going to go back to this slide. You see our multi-member default is coming down to a partnership. And you're like, why in the world is it now called a partnership? Well, because the tax code doesn't actually have laws that are specific to an LLC. Instead, the LLCs for multi-members use the partnership tax code. So if you are a multi-member LLC, the default is partnership tax. Now, we have the same structure of everything passing through. So you see the money coming down to the two partners. But then the entity itself has to send a informational return, which is the top form on the top right. I know you can't really read it, but I wanted to show the forms that you would have to do. This is the 1065. It's just an informational return. It's not the entity paying taxes on this, but this is how the IRS knows where the profits and losses came from. And so the entity has to submit this to the IRS, and then the entity has to submit what is called a K1 to each member or each partner. And that's what you see the two red arrows coming down to the partners and the form next to that. All that K1 is doing is telling the members what they are going to put onto their personal tax return, which is the form 1040, where I have the red arrows saying to the IRS. Now, it gets a lot more complicated than this, but this is where you also start to see the need to hire accountants and other things, because you're going to have a lot of, or at least bookkeepers, because you're going to have forms going to the IRS from the company, you're going to have forms going to the members from the company, and you're going to have forms going from the members to the IRS in the sense of your typical form 1040. So all of this is to just say multi-member LLCs are, again, pass through, but there are more forms that you do have to fill out. All right.
Perfect. We have two questions that, while you take your coffee break, I will pop out to you. So the first one is, can you touch a little bit more on patents, their general cost, and the waiting time for the patent to be usable, or is this state by state as well?
You say for patents? All right. Well, I haven't actually talked about patents at all. We'll get into patents very briefly at the end when we get into intellectual property.
Perfect. Then we will save that one for later. And the other one that I think might fit in here great is, how should a sole proprietor pay themselves to avoid complications when filing taxes and avoid breaking laws? Can they just cut a check?
If you are a sole proprietor, you're not paying yourself anything because it's already going to you. There's no separate entity. Any money you're bringing in is already going to you, the individual. It's not going to a business.
Amazing. Thank you. These are super helpful. I love the infographics too. I feel like that is a really great way to learn. Thanks. And we'll let you keep on going. Okay.
So last kind of one here. And so S corporations. Now, if we go back to this chart here, we didn't see an S corporation up at the top as far as a legal entity type, but we see it down below as a tax classification. I get this question often from new clients who are like, hey, I was told I need to form an S corporation. There's no such thing. S corporations are just a tax classification. And what I mean by that is, when you are forming any of these LLCs or a corporation, again, as I said at the beginning, you're going to go to your state Secretary of State and you're going to file a form. Well, if you want to become an S corporation, you have to file a form with the federal government, with the IRS. So you don't create entities with the IRS, you just do taxing things with them. So just for your own nomenclature, when you're talking to an attorney, a CPA, or someone else who's going to help you with your business, understand that you're not forming an S corp. You're choosing tax status as an S corp. Okay, so getting to what that actually means, though. So again, single member LLCs, multi-member LLCs, and C corporations can all go this route by filing that form 2553. And essentially, it splits the business into two parts. And this is just theoretical. It doesn't actually do this, but you can think of it as the entity and the individual person. And so the salary is going to come from the entity, but then The entity can also send distributions of any remaining profits to the shareholder again. But by splitting it up that way, there are some tax advantages. And this is usually the number one reason why people say you have to file like for an S Corp. You have to be this, because you can get paid by salary and get distributions, but you won't be paying self-employment tax on the distributions. You still have to pay income tax on it, but not self-employment tax. So you're basically becoming a W-2 employee from your own business, but then you can still get other additional money via distributions. Okay, so then going back to this chart, we have the same thing. The business is going to send an informational return to the IRS. That's going to tell the IRS how profits and losses were done. And then the business is going to send it's also a K1, but it's a different K1. It's just for S Corps, to the shareholders and telling them how the profits and losses worked. So that way they can use that for their own personal 1040 at the end of the year. So it looks very similar to what happens with a multi-member LLC. The difference only being that instead of all the profits and losses passing down, we now technically have these split W-2 employee and owner being able to receive two types of money. But all the forms are all still very similar as far as what you're going to be doing with the IRS. Now, if you go on the internet or you talk to people who always say you have to become an S Corp, you have to. And there are very good reasons to do this, but it is not a decision that you should just make because someone told you to. You have to consider certain factors. Do you have a high-paying W-2 job from like elsewhere, right? Are you just starting a side hustle? Then it might not be a great time to actually be taxed as an S Corp because there are limitations on your Social Security that can be capped, and you want to take advantage of that. The other thing to consider is, are you making a profit on this new business that is more than $40,000 a year? Now, this isn't a set number, but this is a good guideline because, again, you're going to have to start bringing on like accounting people. You're going to have to start doing payroll and all these things, and that all adds additional costs. It might not really be worth it to do that until you've reached a certain level of profitability to where it's worth it. Also, there are some states that tax S corporations. So you need to look into those and see if you live in one of those states, because that would add on a whole nother expense. Also, there are limitations on who can be an S corporation. So you're limited to maximum of 100 shareholders, which means you can't technically go public, right? You can't just offer shareholders for anyone. Also, all of your shareholders have to be US citizens or residents, and there are some limited exceptions for like certain nonprofits or trusts and things of that nature, but you can't have a corporation or a partnership come in and be a shareholder. And that might matter for a lot of your fund, like firms that want to fund an investment, that they can't come in as a company and invest. And also you can only have one stock of business, like one class of stock. So you can't have certain privileges to certain shareholders, which again, going back to the LLC, the flexibility to have different rights, different voting rights, different profit and loss, all by your members is flexible. Here in an S Corp, you can only have one class of stock, so everyone has to be treated the same. You might not want that. So another reason why S Corps aren't perfect for everyone. Now, there was a question about a B Corp. A B Corp is not a legal entity, and a B Corp is not a tax classification. A B Corp is something that was created by, and I don't remember the actual organization that has it. I mean, you can look on the internet, it's like B Corp something. But basically you apply for them for a credential. And that's it. Now, it might help you in your business to get, other investing and other things, but it has nothing to do with your actual entity classification or tax classification. Like a B Corp doesn't exist anywhere here. All right. Any questions real quickly before I go to the next?
Not that I can see. This is amazing. We'll let you keep going.
All right. So if you've probably caught something, I'm really a big fan of LLCs for most businesses starting off. And for that reason, the next part is really going to be just focused on an LLC, which when you are forming your LLC and then you determine your tax structure, the next thing you want to do before you start operating at all is creating an operating agreement. This defines the rights and obligations of the members. So how much capital are the members contributing? So if Valerie and I are members, maybe I'm contributing $1,000 and Valerie's contributing $5,000. Well, we would put that in this operating agreement. How are losses and profits distributed? Same thing. Maybe, we're going to have it unequal because Valerie contributed so much more money. She's going to get more profits at the beginning. Again, this is a flexibility you can do. Is the LLC member managed or manager managed? The easiest way to describe this is members have control of the big picture operations on a member manage, but on a manager manage, they might elect one or more people to kind of act on their behalf. And this happens often with multi-member LLCs where you have some like passive investors that they're like, hey, I have no idea how to run a restaurant, but I want to be an owner of one. So I'm going to be a member, but let's have a manager manage this because I really just want to be able to come and eat free food and tell people that I own a restaurant, right? So those are the kind of different things you'll also be considering and putting into your operating agreement. Things like how you bring in new members, how you get rid of members. This is incredibly important. And it's because if you don't have an operating agreement, or if you have one and it's silent on certain topics, state law is going to govern. And every state that allows an LLC has their own statute about how LLCs should operate, but most of them are just the default rules. So they say, like, unless the operating agreement says this, and here you go. So definitely have an operating agreement, and don't just grab one off the internet. Please go find a reputable business attorney or someone who really works in that industry, who understands, because this really matters when shit hits the fan. And you are going to be very upset when you come to find out that you didn't have a pretty easy to predict situation taken care of in your operating agreement. So very important to have this. Okay. So next one, employer identification number. This is the tax ID number for your business or your organization. Only the IRS can issue an EIN, and it's free. So if you type in EIN, like in your internet browser, and you see all these services like, we will do this for you, you don't have to pay anyone to do this. It takes if you have all the information, it has all of 3 minutes to do if you have everything ready to go. It's all online with the IRS. However, they do still have the form available, and that's a good way to start and look at the instructions. So on this slide, the first picture is what the online portal looks like. The second one is the SS4, which is actually the documents for the EIN, that if you wanted to submit via paper, you could, or you use this to really get all your information ready to then go online.
Perfect. Can I jump in with another quick question here?
Yes.
How does an operating agreement work with silent partners?
So I'm going to give you the always wonderful legal answer of it depends. Because of how flexible, this is a great question, Aspen, wonderful question. Because of how flexible LLCs are, if you're bringing in silent investors, you can create different classes for them that make them a true silent investor. So it really just depends on what kind of rights you want to give to that silent investor. And this also matters for when people are receiving, distributions to pay them back. Oftentimes investors will want to go first. And so you call this like a waterfall effect. Like you have first level of people that get paid off, and then second, and then third, and then fourth. You want to do this, or investors want this because they want their money back faster than other people who are, maybe not paying as much or what. So again, all of this will be dictated by how you are setting up your business with that investor. The more, I will say, financially savvy that investor is, the more bells and whistles they're probably going to want in there to protect themselves. But again, it's all flexible.
Perfect. And another one that might be a similar situation, should the operating agreement include an exit strategy, or is that a separate thing you can build?
Yeah, so you should have in there language about how to leave as a member, what that right, because oftentimes these businesses are being started by a small amount of people, right? And you just don't want for anyone else to come in. So likely, if you're going to have an exit strategy, there might be something like right of first refusal. So I want to leave. I no longer want to be in this business, but the LLC operating agreement says I have to first offer my membership interest to the other members first before I can go put that kind of like on the open market and try to sell it and leave. So there'll be things like that that will be built in as an exit strategy that you should have. And again, this matters a lot, like where you are coming into this. Are you the creator of this, or are you someone down the road who's being offered a chance to come into it? At that point in time, you might not have as much leverage as far as negotiations, but operating agreements are just like any other contract. They're negotiable. So you can figure out what you need to have in there to make life good for you whenever you're ready to leave.
That's great.
All right. All right. So all of that was, oh wait, no, sorry. I forgot one slide, but I'm going to talk about it now. Let me get my, okay. So we'll stay right there, but there is a new law that came into effect January 1st of 2024. It's called the Corporate Transparency Act. And basically what it comes down to is anyone who is a owner of a business has to report personal information to the U.S. Department or the U.S. Treasury Department's Financial Crimes and Enforcement Network, which is shorthand for like FinCEN. They are afraid right now of a lot of like foreign, maybe, I don't know, cartels or whatever it may be, like coming in and creating businesses and doing things that they shouldn't be doing, or terrorism, whatever it may be. So basically all businesses are going to have to submit this information, but it's a personal submission from the individual owners. The businesses will talk about like their entity name and tax ID number, like the EIN, but the actual owners have to submit their name, the residence, date of birth, either a driver's license or a passport photo, and also the numbers for their passport or driver's license. If you started a business before 2024, so anything that happened prior to January 1st, 2024, you have until the end of this year. You have until December 31st to make this report. But let's say you started a company this year in 2024, you have 90 days from when you form the company to submit that personal information. And then let's fast forward to 2025. If you start a company in 2025, you then have 30 days to report this information to the IRS. So again, prior to 2024, you have a year, or you have the whole calendar year of 2024. This year, 90 days. Next year and beyond, 30 days. Please make sure you do this. The fines are incredible. It's like $10,000 and stuff like that. I mean, do not miss this. It's crazy, but yes. And there are so many businesses that have no idea about this. So another thing to take away from here. Okay. So the next topic is, what is it? Formation of a nonprofit organization. So, sorry. Okay, let's start off with just some language here, because this gets misused all the time, and I'm guilty of it. What it means to be a nonprofit organization and a tax-exempt organization. Nonprofit status refers to your state law. So you are going to, incorporate. Most states have nonprofits or corporations. So you would form a nonprofit corporation, again, with your Secretary of State. However, tax exempt status refers to federal income tax exemption under the Internal Revenue Code. So most people, when they're thinking about nonprofits, they're thinking really about like 501c3s. And just so you have an idea, 501c, there's actually 29 of them. So there's 501c, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, keep going on. C3s are what most people think of. Those are your religious, charitable, and educational organizations. You only get that status if you apply to the IRS. And I'm going to go over that application in just a bit. But this is something where people are like, oh, I want to form a nonprofit. Okay, but do you want to go through the process of also becoming tax exempt? Because you can be a nonprofit and not file tax exemption, and you might still have benefits under your state law. You just won't have the federal benefit law. So I hope that makes it clear when you're talking about those two. They are two different things, although, again, even I'm guilty of it. I call things nonprofit organizations, and I really mean they're a tax exempt organization. Okay, so formation. Basically everything that I said before with a for-profit business, it's going to be the same here, but it's going to be different documents, but you're still doing the same thing. You're filing with your state to create the entity, to create the nonprofit entity itself. One thing to watch out for is the forms, like the one that I'm showing here on the screen, that are provided by states will only satisfy the requirements for state nonprofit adoption. They don't cover everything that the IRS is going to be looking for. So if you are considering that you want to take your nonprofit corporation and become tax exempt, you need to also include other language in your articles of incorporation or certificate of formation. Please, especially here, work with someone who has experience in having a 501c3, and that's what I'm going to focus on of all the C's. Working with 501c3s to get them tax exempt status. Because if you try to apply and you don't have the right language in your documents, it's going to kick it back. It's going to cost more time and more money. And the IRS doesn't move quickly. So if you are giving them more time to just sit on the file, it's just going to take forever. So that's a plug. Please find good representation to help you with that. Okay. The whole name thing. Exactly what I said before. You still want to think about all these things. So please just, you can refer back to what I said before. We won't cover it again. Registered agent, it's the exact same thing. All this stuff is going to be the same, whether you're a for-profit or nonprofit, when it comes to choosing the right name and looking to make sure it's available, getting a registered agent, and even getting an EIN. All the same. Okay, so where does it start to change? When we were talking about LLCs, we were talking about operating agreements or company agreements. Some states call them company agreements. Here, for a corporation and for a nonprofit corporation, you're going to have bylaws. And again, this is doing the same thing. This is providing the rules for how the organization is going to be governed. But this is not like a policy manual for like day-to-day operations. This, again, is very high-level things like where you're going to put in what your organizational purpose is. What is your board structure? What are the terms of the board service? Voting rights, quorum for voting. Again, not the most glamorous and sexy things, but these are going to really matter when you're trying to make sure that your organization is being operated properly, or if your board is actually following their own rules. So, so we have kind of that's just some things you would put in there. Again, and I mentioned this just a few seconds ago, getting good representation for drafting your bylaws. I have a lot of friends and colleagues who are attorneys who could not write bylaws to save their life. And the reason is that they don't work in this area. The whole nonprofit tax exempt sector, as far as the legal world, is very small, as far as like it's a niche practice. So if you're going to go out and hire an attorney or a CPA or someone to help you with this, please make sure that they have done this before. Find out who some of their, I mean, if they can disclose, they can't always, who clients are, or at least you need to feel comfortable that they understand these rules, because so much of the rules that a tax-exempt organization has to play by all come from the Internal Revenue Code. And most attorneys do not like reading the tax code. Like, it's not fun for most people, let alone attorneys. So that's why it really is a niche specialty legal practice and even accounting practice. Okay. So, sorry, I'm looking at my notes to make sure I'm moving along. And also your bylaws are going to still have to comply with state laws too. So not only federal. So again, just make sure that you're following all that. Because there's so many nonprofits. Oh, I'm going to get to that. Yes. Okay. Next thing that comes up is we have our 501c3s, right? We have in the, like, if you look at the tax code, it says, like, for an organization to be exempt under 501c3, it must be organized and operated exclusively for religious, charitable, educational, scientific purposes. And there's a couple other purposes too. The other thing is you can't permit earnings to inure to the benefit of private individuals. That's a huge legal concept. Shorthand is you can't just help us, like, one person, right? You can't really just direct things to individuals. It needs to be a larger charitable class, and I'll talk about that a little bit more. You cannot engage substantially in legislative activities. So not substantially, you can a little bit, but you cannot engage in any political activity. If you want to get your 501c3 status just, like, dropped immediately, start becoming a political activity, like, organization, and you're going to be gone. Okay. Now, that's what you need to be following, those rules to become a 501c3. But on this slide right here, the reason I have this broken up is that all 501c3s begin as a private foundation unless they meet the eligibility to be a public charity. I couldn't find a good picture for a private foundation, so we have the foundation of a building. It's as good as I can find. If you think about private foundations, you think about, like, the Bill and Melinda Gates Foundation, right? They are, like, they don't need money from anyone else. Like, no one is donating money to the Bill and Melinda Gates Foundation. Like, they don't need it. They are a family that started this. And they have billions to give away. Very different than your charities that likely need donations from the public. And so most people are thinking about, like, 501c3s on the public charity side, your churches, your schools, hospitals, and again, your publicly supported organizations that get funded through gifts and contributions. But I have this slide here because, again, all 501c3s by default are public foundations unless you get to be a public charity. When you're filling out your form to apply for state or for tax exemption, if you do it incorrectly and you get listed as a private foundation, you have to play by totally different rules. It's a lot stricter to be a foundation than it is to be a public charity. So I want to make that distinction because unless you are Bill and Melinda Gates, you probably want to start a public charity and make sure you're doing it correctly. Okay, so a little bit more information on this. Again, it's not on the slide, but just to give you some background, since we are talking about sustainable entrepreneurship, my guess is that if you were looking to create a nonprofit organization, a tax-exempt organization that follows that, you're likely thinking about education or charitable as far as your purposes go. And I mentioned earlier that this area of the law, everything is coming from, like, really your, what is it called? Your like Internal Revenue Code. So this is one of those things where you have to kind of disassociate what you think of as, like, education or even charitable and go to the Internal Revenue Code and see what they define it as. A lot of people are like, oh, I think that's charitable. And it's like, no, it really is not. So let's begin with just a couple definitions. Education is defined as the instruction and training of individuals to improve or develop their capabilities. It's also the instruction of the public on subjects useful to the individual and beneficial to the community. So if you want to be an educational organization, your purpose has to fall within this. Now, when it comes to charitable purposes, this one is a little bit more evolving with like societal needs. Still, you can kind of think of like relief of the poor and distress and underprivileged, advancements of religion, education, or science, promotion of social welfare, promotion of health and wellness. So those are some key charitable purposes that are defined in the Internal Revenue Code. And then you have like, you want to think like, okay, if I'm going to help someone that's poor, distressed, and underprivileged, oftentimes we think of someone being needy. And guess what? The Internal Revenue Code defines needy. I mean, this is how granular this all gets. So you're going to be looking at like, is someone impoverished or low income or lacking resources? Are they hungry, homeless, lacking food or shelter or means to provide? Are they a victim of a disaster or a victim of a violent crime or physically abused? All of that goes under the definition of needy. So this is how you'd be determining, are we going to actually meet that classification? The last thing, and I mentioned this real briefly, is that when it comes to charity, you have to have a charitable class. And that is what they call the group of individuals that actually receive the assistance. Now, charitable class either has to be so large that you can't identify anyone individually, or really it's like truly so indefinite that like it kind of just works for everyone in the community, like no one's kind of excluded. There are a lot of 501c3 charities that were started because someone had like a sick relative and they wanted to bring in money tax-free and give it to that person. If you're giving it to one person, that's not a charitable class. Again, that's a private benefit to an individual. But if you were creating this, let's say, cancer fund, and it's going to go to, anyone who's diagnosed with cancer within like your geographical representation, then you have a chance for a charitable class. So that's oftentimes where people have their charity revoked. All right, I'm gonna take a sip of coffee and then we'll get to the next one. Whew. Okay. So how do you apply for 501c3 status? There's two forms. There's a form 1023 and the form 1023 easy. Now, both of these are supposed to be filed within 75 months of when your organization was formed. And if you're approved by the IRS, they're going to backdate your tax exempt status to the date of formation. So you have plenty of time to go through this application, get it all correct, and then submit. And once you're approved, you're actually technically tax exempt all the way from when you formed. Now, both of these forms are public information, right? These are live documents that you can find on multiple websites via the, you should be able to. But I mean, I can ask any 501c3, I could call them and say, I want to see your 1023, and they have to show it to me legally. There's some ways that has to be done, but technically it is a public document. So also remember that when you're filling this out, because you're likely going to show this to potential donors and you want for it to look proper. About 75% of all applications use the easy form. And this is why I laughed when someone made the comment earlier, oh, wow, interesting, because there are so many nonprofits. Absolutely. It's because of the easy form. It is incredibly easy to fill out. And I'm going to talk about that next, but I'll also tell you my concerns with it. So the 1023 Easy is a form. It can only be filled out online, but there is the paper version for you to kind of look over. And within that form, there is also this 30 questions to establish eligibility to form an 501c3 under the Easy form. The main things you're looking at there are, do you have gross receipts less than $50,000 in the next 3 years? So they expect for you to be small. And do you have total assets less than $250,000? Again, they're trying to make sure that if you're going to be growing at really an exponential rate, that you don't use this easy form. Now, the pros of the easy form, well, it's easy. I mean, it really is like a check the box form. It's not very long. It's like a couple pages when you print it out, and it costs $275. So this is why 75% of all recent tax-exempt organizations use the easy form. Why wouldn't you, right? It's easy. It's cheap. Let's go that way. Well, here's the reasons why I have a lot of cons for it. Number one, a lot of grant-making foundations won't donate to organizations that were created using the easy form. And the reason why is that there's not enough information there for the IRS to truly vet you. And also the long form, the regular form 1023, really does teach the applicant a lot of tax-exempt law. So if these organizations just took the easy route, they might not really be true charities. And a lot of grant organizations, like private foundations, don't want to give money to some organization that might not really be legit. So that is number one, the thing to consider. I personally, as my own legal practice, will not work on an easy form. I don't think you're going to learn enough. I think it just really limits you on how to grow as an organization. Nonprofit laws are really unique. And so completing the long form really does help prepare you for the long term to operate correctly. So with all that, we have the long form, and it's long. It's a challenge. It can be. Again, you can only file it online and cost $600 compared to the $275. It's divided into 9 parts. I'm not going to get into those 9 parts, but some of it is turning in documents like your certificate of formation, your bylaws, so they can review them. That's why you need to have the right language in there. Then you have to give them like a narrative of what your activities are. You have to tell them who all the board members are. There's just a bunch of things that you're going to fill out, and by doing that, it really does teach you a lot of what the IRS is going to be looking for. Even if they were to audit you, they're kind of looking at a lot of the same things. So let's see. All right, I'm going to kind of pass through a little bit more of this. So just to say, like, I really do recommend finding help for the 1023. There are some good online sources, but there's a lot that goes into this. And again, it takes them a while to process your application. So you don't want to give them any more time to sit on it. So make sure you have it completed properly before you submit. And it's going to take you a while. It is not a couple hours of work. It's going to probably take you weeks, if not months, to get everything ready to go. Okay, so for tax-exempt organizations, again, I use the word nonprofits, even though what I'm talking about is tax-exempt. They do have to file tax forms. Now, most of these are going to be informational returns that just explain kind of like what has been going on through the year as far as any income coming in. So I have it listed there, and I won't really get into detail, but there's like the 990N, the 990 Easy, and then just the traditional 990. And which form you use depends on how much gross receipts you have, and also the kind of assets you have. So the larger you go, you're going to have to go and start filing a 990, like regular one, if you get to be that size. The last bullet point that I have there is a 990T, and that is for unrelated business income. And this is one of the myths of tax-exempt organizations, that they never pay tax. Well, that's not true. You, as a 501c3, can pay tax on unrelated business income. Now, I have a stool there as the image, because you think of each of these bullet points being one of the legs of the stool. And if you have all 3, you're going to be paying tax. But if one of those legs disappears, you're going to be fine. So we talk about income from a trade or business. That really just means, does the activity produce goods or services in exchange for money? If it does, you have income from a trade or business. Regularly carried on usually means more than once a year. There's some rules you'd have to kind of look at depending on what your services are from that trade or business. And then not substantially related to the organization's purpose. This one throws people off because they're like, well, I'm raising money to support my nonprofit. Raising money is not a charitable purpose. Your activities that are charitable are that. Now, there could be something that is kind of the same, like you think of Girl Scouts selling their cookies. Well, anyone else doing that, we'd say, well, how is that related to it? Well, it is related to their purpose, because they are trying to advance, these young individuals by learning how to sell, how to get out there into the public, and really, there's a lot of teachable moments there that are educational. So it is related to the organizational purpose. But most of the time, or often, you will find that a lot of these trader businesses are not really related to the organization's purpose. They're just trying to get money. Okay. Any questions about tax-exempt organizations before I move on?
I have a few questions in the chat that I will pop in here. One of them is, I want to operate as a for-profit business as an LLC, but I want to have a charitable arm giving back some of the profits. Would I also need a 501c3?
Okay, there's kind of two parts to this. As your for-profit LLC, you can donate to whomever you want. So if there's an organization that is already like doing the charitable work that you want to give to, then you just give to them. If you want to create a 501c3, in one of the ways that you're going to get funding for that 501c3 is via your own for-profit LLC, you can do that. So you created a 501c3, over here, and then you also have your LLC, and it's just funding money to your 501c3 to keep it going. Why would that be important? If you know anyone who works in a lot of your smaller 501c3s, they will tell you one of the most challenging aspects of running a tax-exempt organization is fundraising. It is a nonstop job. It is often a headache. It is usually one of the things that board members hate to do. So it's pulling nails and teeth to get people to help you out with this. So if you do have a LLC for-profit that can send money directly to the 501c3, that's great. But they don't have to be related. Again, if there's an organization that is already doing the work that you just want to support, you just send them money. I mean, that's fine.
Perfect. Super helpful and clear on that one. Let's see. Our next one is, can a charity legally have a separate lobbying arm?
Okay, so remember, you can lobby insubstantially, and there's two ways that this kind of gets looked at. There is like the default, which is like a crazy kind of like arbitrary facts and circumstances test. And then there is another way that if you fill out a certain form that actually gives numbers that says you can lobby up to this amount and you'll be fine. So the lobbying is not really, lobbying can be an issue. It's the political activity that is different. This would take a long time for me to get through. I have given presentations on this, and it gets really granular on that difference. But that's what you want to look at is, are you really just trying to lobby? In which case you can do that to a certain extent, no matter what. Or are you trying to do political activity, which you can never do? But if you wanted to go above and beyond that lobbying, yes, you could create a separate arm of that. There are rules on how you want to do that, and there still are limitations. Again, this would go way beyond the conversation for today, but this is an area that is getting a lot more traction, obviously, because of just how contentious our elections have become, not just at the federal, but state level. So if you are working for a tax-exempt organization, you need to be very careful on what kind of activities you are doing, because I see often enough where the good intention turns into a political activity, and if it get turned in to the IRS, you would be done. Or you'd face some substantial penalties for it if it was, maybe not the biggest harm, but never a good thing. No one wants to hang out with the IRS. I'm sorry, good people, right? But no.
True. They said they want to sit down and have a long conversation with you about this. So clear your schedule. You have a coffee date coming up.
Absolutely.
But thank you.
You're welcome. Okay, so we're moving through this, and I know we're kind of caught on time, so I'm going to fly through the next couple things. But again, all that was really formation and making sure that you're in the right place when you're forming your business. Right now, what are some other things you need to think about as you start to operate, or as you start to even conceive the business? So Intellectual property, you'll hear it called like IP. It covers several different forms of recognized property rights, but it's its own area of law, because we're not talking about like real estate or personal property in the sense. We're truly talking about this separate, unique area. There's kind of four main categories. You have your copyrights, your trademarks, your trade secrets, and patents. Real quick, just to like one sentence kind of about each, right? Copyrights are artistic, literary, or intellectually created works that are original and exist in a tangible medium. Patents are technical innovations that are new and unique and usable in some type of industry. Trade secrets are information that has actual or potential independent economic value by virtue of its secrecy. And it has value to others who cannot legitimately obtain that information, and it is subject to reasonable efforts to keep it secret. That's everything that has to go in to be a trade secret. And then you have your trademarks, which are like a word or phrase or design or combination that identifies your goods or services and distinguishes them from goods or services of others. Now, I'm going to talk about trademarks just a little bit more, because that's one of the biggest ones that comes up early, which is you become a trademark owner as soon as you start using your trademark with your goods and services. But your rights are very limited. It really only applies to your geographic area where you're providing your goods and services. So if you want stronger protection, you want nationwide coverage, you have to register with the US Patent and Trademark Office. So again, copyrights, patents, all these things, you would have to go through a process to get them nationally registered. I only am talking about trademarks because this really is one of the ones that jumps up early when people are like, ooh, I want to create a logo. Like, I have my logo. I have this, trademarked. But what kind of trademark do I have, right? Is it just local, or do I have nationwide? Have I actually registered it with the US Patent and Trademark Office? So when we're considering all of this, on this slide, I have ownership, protection, licensing. What am I talking about? Well, for ownership, if you are going to be hiring a third party to create something for you, you want to ensure that you have like a contract that is stating that you're hiring them to create a work for you and that you have all the rights of ownership. Or if they are creating it and they want to hold on to those rights, they need to be assigning those rights to you. And that's fine. You can do it either way, but don't just hire someone to create something for you, like your logo, and not think about who actually owns this. Just because you hired them to do it doesn't mean that you actually own it. So, this happens even with just like photography, where like I hire someone to take my photos. Do I actually own those photos, or do they, and they're just giving me a, assignment of an interest to then use them in my manner, but they actually own the rights to them. And also, still within the realm of ownership, if you have employees, you need to be, I recommend that you have in their employment contract saying that like anything that they're creating is being created for the employer. Again, the law would likely say that that's happening because they're a true employee, but like something you would want to cover your bases and just ensure this is clear. Employee, you are creating anything for the business, not for yourself. All right. So then the second one, protection. What we're talking about here is protection from disclosure. So, when you register your intellectual property with the federal government, it's publicly disclosed to the world. Everyone can go onto the, US Patent and Trademark Office and search different things, and they can find your intellectual property and see who owns it, what the rights are. But sometimes it's really crucial to protect the secrecy of that. And so there's a couple different ways to do that. And one of them is like a non-disclosure agreement. So you're preventing the disclosure of an idea when you're pitching it to others. So right now, when you're in this business planning phase, you're like, ooh, I have this really great idea, but I haven't actually created it yet. So it's not maybe something tangible, but like, here's the idea. Maybe you want to have a like non-disclosure agreement saying that the idea is still not protected as intellectual property, but instead is protected by contract. So that's something, you need to think about. And then the other is like preventing disclosure of information that is a trade secret. And I already talked about trade secrets earlier. And one of the things is that you had to take reasonable steps to keep that information secret. How do you do that? confidentiality agreements. So you're going to say, hey, the other party, I'm disclosing this information to you, but you can only use it in the way that I've authorized it, no other way. And this is also something, again, with the employment side, you would want to have confidentiality agreements with your employees, independent contractors, anyone who's coming in who might learn your trade secrets. And then the last point here on this slide is licensing. And licensing is going to come into play when you want to allow someone else to use your intellectual property. So if I want for someone to use my logo, I am likely going to have them sign a contract with me saying, you have the right to use my logo for these things and only these things and only for this amount of time. And depending on what you're really granting to someone, and depending its value, you might actually get a royalty payment. So if you are creating something, this intellectual property, and it's a value for someone else to use, that's a way for you to get money back, is to say, hey, I will license my intellectual property to you, and you have to pay me something for that license. Now, my logo, sorry, not really making any money off of that, but I still would want to have control over how they can use it. And if they did something that I didn't authorize, now they've breached a contract with me, and I'm not going to play nicely because, like, that's my brand and I want to protect it. So that's intellectual property really shortly. I know someone earlier asked about how long does it take and how much. Really, there's good information just on the US Patent and Trademark Office that gives you like the basics of all of that. I would highly recommend you go to that website and look that up. I mean, you likely for patents specifically, you're going to want to hire people that work in that area. I would not touch a patent. If you came to me and you're my best friend and you said, John, I want to file a patent, I would say, good luck. Go find another attorney, because like I have no, other than the definitions, I don't live in that world. Find someone who does, because that is your property once that is done, and you want to make sure it is done correctly.
Totally fair and well said. I'm going to pop in one more question here. You mentioned national recognition for trademarking, but what about international trademarking? If you want to trademark a name or a logo, how can you protect it internationally?
I mean, it's the same thing of going through, starting off with the U.S. Patent Office, and then there are some world organizations that do that. That's beyond, honestly, the scope of this, and that, I mean, I can tell you, if you're going that route, and that's wonderful that if you're thinking ahead that way, but you're going to need to speak with people who do not just trademarks, but I mean, you're looking for people that really work internationally, so you can get all your ducks lined up in a row, right? You don't want to deal with one person on the state and then like, oh, I want to go national, and they're like, well, you need to go to this person. And you do that, and then the national person's like, oh, I don't do anything internationally. So I would line up everything to make sure you're getting the right people to help you. Excuse me. All the way through. And I'm sorry, I don't really have an answer for that one.
Totally fair. You have so many more answers for us, so totally understand.
All right, moving along quickly. I appreciate everyone who's still here and hasn't fallen asleep or turned this off. Okay. Websites. Why am I talking about websites, right? When we're talking about all these other things, well, it's because more than likely, no matter if you were starting a for-profit business or a tax-exempt organization, you're going to have a website. And there are a lot of things that can go wrong with this from a legal perspective. We are starting to see more and more lawsuits for websites not being accessible for individuals with disabilities. And you can get some serious fines for this, or the trouble of going through like a court, like a lawsuit. So there are services, whether you are using like your build it your own website, like Wix, they have, a widget you can add onto this. If you are creating your own, there's widgets that you can do on like, WordSpace, or if you're hiring someone to build your website, they should have the capability to put this in here, right? Please make sure you do. Yes, you're going to likely have to pay monthly for that service. But number one, personally, I think it's the right thing to do, so everyone has accessibility to your website. But also, that small cost monthly is going to save you a lot of money down the road when someone does file a lawsuit. And this happens against small businesses all the time. Honestly, it's a little easier to go after a small business for this than it is a larger business. So highly recommend, please make sure your website is accessible. And yes, okay. The next thing, photos from licensed sources. If you are using images on your website, please ensure that you are getting them from legitimate sources that are providing you with a license to use those. So if you don't go into the internet and find a really cool picture and just copy it and put it into your website. That is highly illegal. Also, if you ask someone for a photograph, definitely ask them if they are the owner of it, and like ask them if they actually took the photograph. Do they have the legal rights to it? If it is just them, then make sure you are like asking who took this photo and how did you get the rights to it. Just because someone is the image of the photo doesn't mean they actually own anything. I've worked with this with clients before where someone has given them a photo and guess what? They didn't own this and they got a cease and desist letter. So, there are now firms that are out there like copyright, trademark, whatever infringement kind of firms looking, like they have software that just scans the internet looking for their clients' images. And once it pings your website, guess what you're getting next? You're getting a cease and desist letter and they're asking for money. So please make sure you do only use photos from licensed sources. Third bullet point, privacy policy. If you are receiving information from, like you're collecting personal information from people, so it's like a newsletter, like please sign up here and give me your email and your name, or like contact us for this, give us your name and email. You need to have a privacy policy on your website that says, how are you actually like gathering, using, sharing, disclosing, or managing that data? People do not like it when you take their information and you share it with others, unless they have given you that right to. So you want to make sure that you have that in there. And again, if you're working with someone who's building your website, they can help you with that. You can find other resources. You can hire companies to do it. But it's something that if you are misusing people's information, you are going to likely run afoul of state laws. And this is another thing that we're starting to see more and more of, are lawsuits coming up because people's personal information has been shared without their consent. All right, so I have a couple other things that I just briefly, I didn't make slides for, I can say, or we can end it right here, Valerie, or we can have questions.
I mean, I'm loving everything you're saying. So if you want to share it, I think we would love to hear it. For those of you that are still here, I appreciate it. I'm captivated. So if you want to share those, I think we would be super, super grateful.
Okay. So a couple more things. I felt like I was already going to go long on this, so I did create slides. But if you are going to hire employees or independent contractors, please sit down and take your time to make sure you're understanding the difference between the two. So this has become a really big point for local, like state agencies, for the Department of Labor and the IRS, looking for misclassifications. And I know there's a lot of people in here that are hospitality, and we know this is a really bad issue in our industry. So if you're going to be bringing on employees, independent contractors, making sure that you know your state's law and the federal law, because both of them will apply, and figuring out if someone really is an independent contractor, because most states, will say the default is you're an employee unless you can prove they're an independent contractor. And if you misclassify someone, the penalties and fines that come along with that, also the bad PR, I mean, it's just not good. So be very careful with independent contractor situations. It is something, again, that I see so often. Someone's like, oh, well, I thought I could be this, like an independent contractor. Or I thought I could hire this because I see other people doing it. And it's like, well, did you go through an analysis to really figure out yes or no? Because if it's true, they are an independent contractor, great. There's no harm, no foul. But if they're not, it's really a very negative situation that takes a long time and a lot of money to get through. So that's kind of the first bullet point there. You need to understand the Federal Labor Standards Act. And that is quite a big law. And there's a lot of things that are industry specific. And this is also, again, one of the areas where small business owners are like, I don't even know where to begin or anything. So really, you can find good resources out there, but at the same time, I always am a big proponent of spending some money at the beginning while you're going through this to get the proper foundation from reputable sources, then coming and hiring an attorney 2 years down the road to fix a problem that could have cost you a couple $100s, a couple $1,000s in day one, but instead is costing you 10x that in year 2. So absolutely, please make sure you're doing this. So along with all that, you also have like payroll taxes, workers' compensation. There's a lot that goes into having employees. I'm just going to leave that there. Other thing, when you're dealing with like contracts, right? Most of you are going to be entering into contracts with your own clients or with vendors when you're buying things. Over time, anyone can become good with contracts, but likely most small business owners, from what I've seen, my experience is that they don't understand all the terms that are happening. And my recommendation is if you do hire an attorney to look over your contracts, don't be afraid to ask what you might think is a stupid question. That's what you're paying them for. They need to really explain each provision to you that you have a question about, because if you go and you're sitting in a room and you present that contract to one of your potential clients and they ask you a question, you don't want to have to turn around and say like, I don't know, let me ask my attorney, right? Like, this is your contract, you should know it. So get help early on to make sure that you're understanding these contracts. Don't pull things from the internet. I know it's easy to go find what someone else did. I often equate this to like telephone tag when we were kids and like one person says something to the next person, to the next person, to the next person, and 10 people down, it makes no sense to what the original comment was. Contracts that you find on the internet are like that. The first draft might have been like really written by an attorney, but then someone else took it, and then someone else took it, and someone else took it, and someone else took it. And by the time you are getting it from that 6th company off the internet, it has been just totally messed up. But it looks good. It looks like a contract, and so you're like, yay, this works. But it doesn't. My law firm is purely transactional. That's all I do all day long is read contracts and give my clients like counsel. So it is that type of business attorneys do exist, and I highly recommend you find someone who can counsel you on your contracts until you really do become proficient and understand what all of these terms mean. One of the last things I have is your local laws. And again, this is going to be different for everyone, but don't forget about what kind of permits you need on the local side. What kind of licenses? Are there zoning laws? Also, there's taxes that are only at the local level. So don't just forget about, don't just think state and federal taxes. Oftentimes there's local taxes too. So understanding all of those local laws and taxes all come in. And I think that's it.
I mean, wow, this is so amazing. Like, you have given so many great tidbits and facts, and you have such a great way of bringing really big, huge ideas into something that's very concise and easy to understand. And I can't imagine how hard that is. I appreciate that so much. And like, especially your background in the industry definitely shows you have, wow, to listen to you all day. This is amazing. Like, truly, you are such a great presenter for this. And like, I'm going to watch this over and over again.
I really do appreciate that. The professor side of me is like, honestly, I bring that into my law practice all the time because I want for my clients to understand things and being able to explain it in a like realistic way. And, right? Like, I mean, it does no one any good to just talk in all legalese. So I really appreciate that. I hope that went for everyone and that you understood. I am available. You can reach out to me, and I can answer as many questions as I can legally and ethically. Obviously, there's always a barrier of whether or not you're a client and what I can say. But I am a big proponent of trying to get this information out there because it's hard enough being a small business owner or executive director of a tax-exempt organization. So if this information can at least give you a foundation to start operating correctly, then this was time well spent.
Love it. You're getting so much love in the comments in the chat, tons and tons. So I feel like your DMs are about to be busy. So we'll close it out. Thank you for everyone who hung out for this. I think there's so much valuable information here. Wow, I'm like very, very thrilled to keep watching this. So again, we want to thank you, John, Diana, and David earlier for chatting with us. Thank you, Altos Tequila. If you enjoyed this class, please hit the like or love button and show some love in the comments, which you already are. And if you want to see more Portland Comps Week classes just like this one, follow Portland Comps Week on Facebook, which is facebook.com/PDXCW, listed here, or on our YouTube, which will be popping in as well. We're also at PDXCW and Lush Life Productions on Instagram, so you can follow both of those there, and you can find out everything that's coming up. And speaking of that, we have more information on Tone Society's Instagram, at Tone Society. John is going to be at TX Hospitality Nonprofit Law. That's popping up with some underscores in there. Our previous speakers, Diana and David, are at The Real Jibaros, and that'll be below. I personally am Valerie Alvarado, and I'll be at Your Spiritual Advisor. Dad joke fully intended in that one, on Instagram. And so DM us. Let's keep the conversation going. We have a few more great talks coming up, including on May 2nd, where Carlos Ramirez, Alex Jump, and Shannon Michelle are going to be sharing their tips and tricks for making our industry lifestyles more sustainable. So much more to tune in for. We will see you soon. Thank you for watching, everyone. Bye.